Hi and welcome to Swissquote's daily market talk. It's Thursday, July 17th. Investors hopped down and hopped right back up yesterday after rumors spread that Donald Trump would fire the Fed chair Jerome Powell to appoint someone who would cut the bloody interest rates. The news was later denied by Donald Trump and markets quickly steadied. The US stocks gained indeed on strong earnings, especially strong bank earnings, while European markets fell amid trade uncertainties. So we will talk about all that and more. But before we do, please keep in mind that opinions are my own and this is not financial advice. So the day Donald Trump got re-elected for his second term as President of the United States, we knew that the headlines would be full of twists and turns. We knew that there would be tons of surprising and rather unusual headlines on the wire every day. And we are served way more than we expected and way more than what we were prepared for. Because what's happening right now is surreal, and yesterday was simply one of these days. The New York Times actually reported yesterday that the US President Donald Trump has drafted a letter to fire the Fed Chair Jerome Powell and ask GOP members to give a feedback to this opinion. The news brought nothing new, obviously, on the wire. Everyone knows that it's not a love affair between the two men. Trump doesn't really like Jerome Powell because he doesn't want to cut the interest rates, but drafting a letter sounded like things were getting real and concrete and triggered volatility across the US dollar, sending it sharply down as the US 2-year yield also tanked on expectation that whoever would replace Jerome Powell as the next Fed chair would be mandated for aggressively cutting the interest rates in the United States to please the President Trump. Then Donald Trump came up and said that he has no plans to fire Jerome Powell and that he was only discussing it in concept. So I'm citing this from Bloomberg News, guys, that he is only discussing it in concept. The concept of firing the Federal Reserve Chair, Jerome Powell, because he is not making the decisions that you want him to make, even though his decisions of not cutting the interest rates right now make sense in this economic reality of things and trade uncertainties. Actually, many people also think that he was trying just to see the market's reaction if he actually fired Jerome Powell. We don't know if it's legal or whatever, but whatever it is, the tantrum has passed for now. The markets caught their breath after the initial resignation, but yesterday actually left investors skeptical about what will follow. Because in Turkish, we say, where there's no fire, there is no smoke. Here we know that the smoke is actually coming from a big fire. So the consequences of such an attack on Federal Reserve's independency would be potentially dramatic for the US. Not only the US dollar and US treasuries would tumble, but the Federal Reserve would also lose its superpower, that actually allows it to buy billions of dollars worth of US treasuries and boost the financial markets when they need it. Remember, the United States and some privileged economic zones like the European Union and the UK are the only ones where the government bonds could be supported, bought by their respective central banks to support the debt by these countries' debt. So it's because credibility makes this possible. If you lose that credibility, you will lose the most important tool, superpower, that you have in hand in order to act. Because believe me, if you're a Turkish central bank buying Turkish government bonds to finance the Turkish government's debt, yes, it even sounds very funny and dodgy, right? So you would simply be printing money, which then should, in theory, lose its value. So if this whole QE and Fed balance sheet things have been working so magically since decades now, it is simply because the Fed has this magical, this super power, an impressive level of credibility around the world, and this credibility play makes it possible. If that's gone, lowering the interest rates would hurt the US dollar and even US treasuries big time because it would hurt credibility. So in summary, keep looking for safer safe havens. It feels like we will have some action at the Fed when we are back in fall. Now, the stress that Donald Trump has caused yesterday regarding Jerome Powell and his position actually caused a certain sell-off across the major US indices yesterday, but the S&P 500 still managed to close the session with gains. A set of softer than expected PPI figures helped cooling the mounting inflation fears of the day before, when the CPI data printed higher than expected numbers. In contrast, then the banks actually continued to reveal their quarterly results, and boy, they looked good. Goldman Sachs equity trading desk, for example, well, it posted its best revenue in the history of Wall Street. Morgan Stanley and Bank of America, on the other hand, scored their best second quarter on record as well, thanks to high market volatility due to incessant turns and twists that we see from the White House policies that have worldwide implications and repercussions. SPDR's financial sector fund first fell to a 3-week low yesterday, then rebounded, but still the daily chart here suggests toppish move after a 24% rally following the April dip despite strong bank earnings. Elsewhere, Nvidia consolidated gains near a record high level yesterday. Alphabet timidly extending gains to $185 per share level on news that Google will debut new Pixel branded hardware at an event scheduled on August 20th, where the company will be revealing several smartphones and a smartwatch, and these devices will be powered by their own AI technology. Now, provided the market's timid reaction to the news, investors don't necessarily expect the event to be a first iPhone reveal kind of event, but given that iPhone is actually falling behind its technology peers in the ongoing AI race, the window for replacing iPhones with the new big gadget is wide open right now. Because note that iPhone is now around and at the top of the list since almost 2 decades, which is way longer than its predecessors like Nokia and Ericsson, for example, and BlackBerry. Remember BlackBerry, who also had their star moments, but these moments, these months or years lasted way shorter than the iPhone. So I'm not saying that Google will be inventing the next big thing, but I'm saying that AI will soon be given a face. By whom though? I guess we will find out soon. And speaking of AI, ASML, which announced better than expected second quarter revenue and earnings yesterday, failed to surf on that wave and couldn't avoid an 8% slump post earnings yesterday on the back of uncertainties regarding next year's revenue due to trade restrictions. So the stock price actually fell off as April to, yesterday bullish trend. But the fact that ASML is the only chip equipment maker for the world's leading chip makers means that they will continue to have business as long as its clients will. Therefore, a dip like the one that we saw yesterday could be an interesting buying opportunity to buy a dip in ASML. Otherwise, the rallies that we see across AI stocks should be trimmed as well, because the gap that we see today between semiconductors and ASML suggests that the two should converge somehow. Maybe AI stocks will come down, maybe ASML will go up, or both, but they should converge. Now, zooming out, ASML, the SOX 600 index yesterday remained under pressure despite gains in the S&P 500 due to lack of good news on the trade front. The European leaders now mostly agree that they would take retaliatory measure if the 30% tariff threat from Donald Trump came to materialize. So these measures include taxes on US tech giants, for example, targeted curbs on US investments in the European Union, including limited access for US companies to bid for public contracts in Europe, for example. So let's see if Trump chickens out this time or not, and whether it triggers a market reaction or a market correction. I often watch a market correction happen from my summer vacation, and I will be on vacation notification from tomorrow. So let's see what happens, but this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please do not forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.